The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, we're back, and here we are. We're looking at the Dow down 121 points. Now, this is going to be very, very important. Look, IND. The Dow at this particular stage has just gone nowhere since the high that was made. In fact, you can say since the breakout to leg D in the I didn't discuss that. Let me just do this quickly. I know that we're always having new listeners. Let me just see if I can do this here. Find it. Is that it? Yep, that's it. Let me just slide this over quickly. In the Chapman wave methodology, there are only three patterns: straight up, straight down, the arch formation, and the cup formation. You can get a combination which looks like a lowercase h, straight line, arch, red, because if it takes out the left side low, that's a real problem. Have a look at this right here. Let's go to there. Look at that arch formation. I'll squeeze this a little bit. This is a 2-minute chart, just to always show you the patterns. It doesn't matter if it's a multi-year, monthly, long-term, or just a short-term 2-minute chart. Patterns don't change. They're just the same thing. Straight up, straight down, arch, or a little cup. Look at this little cup here that failed on the right. Okay, let's get back to our story. And we'll go back there, and then we're going to go back to... back to there. Okay, and in the Chapman wave, if you look for the most obvious low bar and merely count each successively higher peak, alphabetize them, uppercase on the way up, lowercase on the way down. On the way up, you're always looking for a buy signal to be upgraded to a buy mode. The implication is you're going to go to at least the fourth highest peak. Once you're there, you could recycle to a brand new buy mode with another 4 peaks higher. You could go 1 peak higher and then drop, or you can have a sharp decline from D. D is where you lift your foot off the accelerator, hover over the brake, and wait to see how it unfolds. Or you can deal with it if the technicals say to you, okay, now you've got to be looking at other things. Now let's get out of that here, and I want to show you what we're looking at. Look, we've made the cup formation. We've made an arch formation that was very successful in the weekly chart. Went to 26,695. The week of the 26th of April, remember we went short there right a day before the reversal, and we went long on June the 3rd for subscribers right there when we were at 24,701. We went long at about 24,825. We remain long that position, having taken a little bit off. However, we're also short from the exact day of the high. In fact, 7 points from the high, and that makes me worried always. When 3 times, actually, it even goes back to the December low where we were buying the 3 times along, but we got stopped out a couple of times right at the low. So I'm getting a little nervous because, yeah, this is the Chapman wave technique. No technique is fallible. Every single technique has its pros and cons, and I'm looking at this and I'm saying, wow, we got the doji high, we got everything about this, and yet it hasn't. The market hasn't pulled back like it should. Remember what I said? In a very simple look at the markets, you can use any moving averages you want, but in this case, look, the green line moving average, we've only now, for the very first time, gone decisively under it since we broke out around about June the 5th or 6th, and that says to me, this is the start of the process that I said to you can take a long time. Just as the top right here, when we were short, right there, we went 1 bar higher, and then it took forever, even a double top, even like we just saw, a double top attempt. And then it was even 5-6 sessions later that everything broke down. And that's what I've been saying. Anticipate here that over the next few days, we're going to have some bad news come out, or the market's going to take some news to be, or the perception of something, but it's going to have a dark cloud cover over the market if there is no spike to the 27,490, just breaking out above the 27,300, maybe 27,420 area resistance. Just snap through it. Look at this, automated, 27,474. That's the newest one. and we're not getting there. So that says to me those weekly charts are much more important now, because the S&P, the moving averages, it hasn't even taken out the 9-period moving average, and yet we made an all-time high in the cup formation. I don't want to draw on this chart because I use it only for very simple tools. And there's a double top right there. We made it 3,000 and what was it? 2014 and then 2017 yesterday, and that's got all the symptoms of a potential double top. It's not a double top until it actually plunges below the trough in this particular instance, and that's why I'm saying that any move in the S&P below 29.82, 29.78, that's going to be a more serious decline. All right, look at the QQQ. Makes an all-time high yesterday, a little bit more than a double top. That's kind of impressive, closing even at the high. Big move down today, minus 170 at 193.45, down 0.87%. Now, I could do this. Maybe I'll do that just so that we've got almost naked charts and we can do something and we can go, there we are. So in this particular chart of the weekly, way up at 201.29 is the next resistance because we've taken out all the others in the QQQ, the NDX 100 trading vehicle. And the MACD's, there's no MACD. The 9-period moving average is still very strong. Price is almost double the distance from the 14 to the 9-period weekly moving averages right here. It's going to take a long time for it to break under 185, the 14-period moving average. So this is a process. And I think there's a chance that maybe we will look more at time than we will look at price. And as I'm looking at this, yes, there's a question. Let me just get this out of the way. GBTC, I said GBTC is in a peak that's made a more intermediate term. That is the Bitcoin Grayscale Trust trading at 1272, up 45 cents. This is the weekly chart. Let me show you the daily chart. I'm doing this because I want to show you apples to apples, just these two moving averages alone. Look what it said. You're underneath that. You're kind of stuck. You've made an H pattern, trying to double bottom. I just think it's stuck. At least for now, I think Bitcoin is stuck. Let me get back to our story. The IWM, the Russell 2000, had a spectacular day yesterday, given half of that back today. Why do I not want to go long for subscribers? Because I didn't think it could break out. Not only that, look, it's got 152.76. Chapman Wave automated resistance level here and 158.67 next. I would wait. I think that it's telling us that every once in a while there's going to be a flourish of activity into the small caps, but it's still kind of stuck. Let me get out of this. Let me go back because I want to look at weekly charts with my notation. So the Dow has made a peak E. Now there's a chance, if you remember, back in 2007, we had a sell signal which went to a sell mode in August, I think it was. And then I said there's something wrong because the pattern that I'm looking at said that the weekly should still make what I called a double hump, a camel double hump. You know, there are some camels that have this double hump. And that looks like an M-shaped pattern in the MACD. And I said, there's a chance we could have one more rally, which is exactly what we did. And then we were able to, thank goodness, to get the top. But at the same time, that MACD and stochastic just went up for about 3-4 bars and then came plunging down below 80% in the stochastic, and the MACD fell. This is at 95%. It is very strong. So the weekly is very strong. I'm pulling this E for now, but I'm going to show you something in the Chapman Wave methodology that I cannot ignore. I'll be right back. Basil Chapman, Dow's down 133. We'll be right back and we'll discuss patterns.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Just real quickly, I think the GBTC is stuck. It's going to keep coming back to the 12 level. That peak F in the weekly chart says, fabulous move. There's no major sell signal or anything, although 17 down to 12 is a pretty big sell signal. But I'm talking about in terms of saying, yep, it's going to plunge down to the 8s. I think it's stuck in a range now. 1150 is the 9-period moving average in the weekly. It could easily have a couple of pop-ups. I think maybe an H pattern is possible. But I just think the major deal has been done. All right. Now let's go back to what we were looking at here. So if we're looking at the S&P, the S&P made a nominal new high. I thought I typed that in. Didn't I type that in? Yes, there it is. Okay. Right. 3,019.39, and we're trading now at 3,005. So we're down 14 points. No big deal when you think about yesterday's huge candle. But look, the MACD is deflected lower, stochastic down on 17% in the daily. But here, wait a minute. Weekly chart, the MACD is making that M-shaped formation. Remember, I like to put a rectangle here when you just briefly pull back and then you go back above it. It says, watch out for that M shape. But now the M pattern has a limited time. The way up is you don't know how long it's going to be, but on the right there's a limited time before it starts to narrow. That is the distance between the 9-period differential, the green line, and the red line, the 28-period exponential moving average, and MACD is steady at 94%. Now, what do I mean by limited time? I mean that it could come back down, and then it could deflect yet again off the slow-moving average, the red line. And if that's the case, this can extend out for another couple of weeks. My thinking here is that this is exactly this. There are so many things that are going on together at this particular time for me to say, hey, this period, and this is what I was saying 3 weeks ago. You remember I said 3 weeks ago, I said it's really an important week. Now I think there's starting to be limited upside. Yeah, we can have more upside, but this is the process that I'm thinking of, that it gets really choppy and it becomes very selective, becomes bifurcated. Bifurcated meaning that you can get a stock like a Tesla just dropping 11%, and then you can get a triple M that finally, remember I said to my subscribers just the other day, I said, my Dow Quartet, and I mentioned this on the air, I said my Dow Quartet, Caterpillar, Triple M, United Technologies, and IBM are acting way better. What I am getting concerned about is my cash index, CASH, which is Cintas, Amazon, SPY, that's the S&P 500 trading vehicle, and Home Depot. They're getting a little bit toppy here. And at the same time, what I was looking at is that the positions that we had for my opening call subscribers, we've had 10, 12% rallies just this week alone in some of the stocks indexes, and I'm this is a very diverse engine that we're looking at here. This is this is a hybrid. Absolutely. You got your General Motors, the old energy user, doing very nicely, and then you've got your battery operated, contemporary, state-of-the-art Tesla having a little bit of a problem, down 37 points, down 14 at a peak D. Remember, we just discussed how important, look at this peak D right here, pulls back sharply, has another ABC peak D up against the 200-period moving average, kaboom, MACD turns down, stochastic still good at 81%. This is a problem. Now, 200-period moving average in the weekly, right at a B. So let me just do this in terms of this bifurcation. In the weekly chart, when I look at the S&P, SPX.X, I always have to type it in. I could just click one of the things, but then I'd forget and I mess everything up, so this is the best way. There is a chance that we're looking at a rather large arch formation in the daily, which leads to the weekly. And this is the way it leads to the weekly. Let me just finish drawing this arch, because it's all about arches and cups or V-shaped patterns, is the same thing. And in this particular instance, we've got no signal whatsoever in price. All it's done is had a little inside day from yesterday's huge move up. 2 big candles, 3 big candles. Aha. But here we're looking at what are the potentials. The MACD, to get positive again, would have to see a price of 3,025 to 3,000, I'd probably say 3,029. And then the MACD might cross positive. Stochastic to go over 80% would have to have the same thing. They're in decided down moves at this particular point. And that's a hint to say you could get price, because price is the arbiter of a trend, holding well as the technicals pull back. Then the technicals rally as the price moves up just a little bit, doesn't break out, just moves a little bit. And then the next move down, everything comes down together. That's one possibility. Another possibility is there is just something Monday. One of the Trump administration people says things are going fantastically with the China-U.S. negotiations. Boom, what do we see? Up 250 in the Dow, up 30 points in the S&P. FANG stocks start to... I got a feeling this is not the case. I got a feeling that this is the one where they're going to have measured statements. Why? Because this is exactly the period before the election, a year and a half before the election, actually probably even less because you've got to go to November. Now's the time to start preparing. And how do you prepare? You prepare by having if this and if that, real economists. If this happens, such and such goes, and if that happens on the left hand and on the right hand. However, what's really important is that that weekly chart is holding beautifully, but it's in this Chapman wave inside track, up channel, repellent, resistance zone. What I mean, see the green dashed line right there, long-term trend line, stopped 3 times right there, today as well, this week as well. And there's the red line. And we're now right on this red line. That's the dashed inside track, first the starting point of the repellent zone. So that says to me that if by next week or the second week, that would be the second full week of August, if the S&P is trading anywhere close to the 9-period moving average of 29.52, so let's say it gets to the 29.70s, it says there's a really good chance that we're going to use time, some price, but more time than anything else in this rotational correction, and that's what I'm going to term it. I think we're going to see a rotational correction so that there's no smash to the downside in unison with everything. December sort of saw that unison, Joe Granville type 98% of stocks were going down. We haven't seen that for a long time. I don't think we're going to see that again. I think it's going to be rotational. And why do I say that? Because I've got a feeling August is going to be a fairly weak month, and that'll be the first month that we can say peak A. Yeah, it could be an alternate peak F in the monthly. I think this is just a leg A, and then we're going to take some time. Maybe it's even 2 months of consolidation. Maybe we go in the usual fall becomes the fall, the FAL becomes the FAL. That means that the September-October period is very weak, and that we're in the fall, we see the fall. And, I had that beautiful cartoon. I don't know where it's gone. I'll try to find it maybe for tomorrow that I drew a long time ago. So S&P 500, leg A from 2346.38 to 3019.59. I would say that that's a pretty serious leg A. You can have 2, you can even have 3 months of a digestive phase. But then later in the year, boom, I think it starts to the upside again. So that's what I'm looking at here. I wanted to explain the weekly chart, how strong it is. Now we'll do the same thing with the Qs when we get back, maybe even the XLK. I think this is an important session to do. Tomorrow's Technical Friday, but we're doing it today. A lot of questions coming in. I'll try to deal with them. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, so let me just show you something else here. I'm going to go to this with automated Chapman Wave notations. Look at the cluster of resistance levels that are automated here on the daily chart. Weekly chart is much higher, 28,000 to 28,590s. So, and then 27.5 to 28,900 in the monthly charts. So this is serious, and there's no support yet that I can see. If you break 27,100, it could go quite a bit deeper down to 27,060 quite quickly. Look at the S&P. X S&P Chapman Wave Automated resistance points are at 3,000 right here, 3,012 to 3,020. We went to 3,019. Then there's an outsider at 3,027. However, this one does have supports in the daily, 29.76 and 29.68. That's exactly what I'd be looking for, some decent support if it happens to get down there, using up more time than price. We'll see. And the QQQ and 1, 2, 3, NDX 100, we're right in the resistance of 195.10 to 195.47 and 195.69. And I would say that the support, where do I have support? I don't have support. 193.31. We're in 193.56 right now. That's a 10-minute chart. And then it goes all the way down to the 190, 190 area. So this is going to mean that there's a whole process that's involved before there's any signal at all in the QQQ. The IWM had a fabulous run yesterday and it stopped right there at 157.76 to 158.67. A lot of resistance levels. Support 155.80. We're at 156.15. And then 155.84 was a resistance. Now that'll also become a support. And a lot of this one is the weakest of all the indices. I think it's later that the IWM really kicks in, later this year. Maybe it'll have to be October, I don't know. Well, we'll also have to look at, let me just do gold here because I had a question about that. Yeah, gold had a little bit of resistance and it just snapped right through it. And that was all in the 114.22 to 14.25 area. It just broke out of it recently, and then it came back, tested it, and then shot higher. 1465 will be the very next level of resistance. 1416 is support. It's trading at 1416 right now, and then you get to 1416.60. Goes below that, it can go quite a bit lower. I don't think it goes to 1386 area, but let's watch this closely. If you want, I'll do silver. Silver right now is trading at, it's down, I think it was down, it's down 14 cents. That stopped right at the 1652 to a little higher resistance, and that's the daily. 1648 would be support. It's right there now, and then 1641 below that. It can go quite a bit deeper. And let's go to the dollar using Chapman Wave Automated resistance and support levels. You can see how just fabulously these things work. And the dollar stopped at the 97.84 level. 98.25 is the next resistance, and way down 96 to 95.72 are support levels. Look at the chunk of weekly resistance levels, and that's fine. I think that's exactly what we're looking at, that the dollar's had a spectacular move. Look, here it is, DXY. We're along from 90 for my subscribers to my opening call from April a year ago. It's had a fabulous move up to the 98.37 level, then down to 95.48. Most recently, today's 97.72, almost touched that previous high. It's got a bit of work to do. And then it starts leg D at 98.38, and that's where I think I've got to start being careful. It's great that it does that. It's a little too quickly after peak. See if it does it this month. That says, oops, be careful. You've got a little, at least a little sideways move. USD JPY. So here we got the euro dollar currency pair holding at 1.115. Big long-legged doji candle right here, but I think there's a little more work to be done, but it is trying to find some support. It took out the left side low of May, and this is going to be very important because that monthly chart looks just horrendous. USD JPY is the yen. Very nice. It looks like the yen wants to go to a leg B in the weekly and a leg C in that at 108.67 right now, up 0.49. If we can take out 108.99, if we can get to the 109s, that starts a leg D in the daily, and that's going to be very positive. Then you've got to go all the way to the resistance in the monthly of 111. I think that's going to take a big effort. I haven't done crude oil. Crude oil right now is trading at, we've got, whoa, that doesn't look good. That's trading up 33 cents, tried to rally today and then fell to 56.21. I think it's going to test the 54s. That's the way it looks right now. A couple of questions I got. Should I do that now? IYT, sure. The IYT is the transportation index. It's down $1.22 at 192.61. 195.65 was the high of the 16th of July. Pulls back to the 200 period exactly, goes to 187s. Now it's trading at 192.61, and it's got an inside day. I like what I'm seeing. but I think it's going to take a lot more to break into the 198 area. Probably needs more time. That's what I'm thinking. Now, let me just quickly go. I had a question about the E-mini. Yep, this is H pattern, and the lowercase h can have a little small h, and if that takes out the left side low, you've got yourself a dreaded H pattern that can go quite a bit deeper. Be careful. Now, I suggested to my subscribers, for instance, we are along the IAI, and that is the broker-dealer index. Is that a fantastic move? We're along from 60, it's gone to 66.62, a 10% gain, or just over a 10% gain. Now trading at 66.10. I think this is in for a digestive phase. It doesn't have to break down, just a digestive phase. Peak F. I actually think this is an F. I'm going to do this. I'm changing this to an F/B. Let's see if I'm going to be right by saying that this looks very positive and that it doesn't have to break down, and that at some point we will go into the 67s. Might have to wait a little bit. And the weekly chart's improving, and now I think you'd have a pretty decent digestive phase. We're along Schwab. Schwab's had a great move. It's gone from our entry in the 39s, it's at 44, so there's another 11% gainer. And it's at deep hitting today, right? This did exactly, I drew this for my subscribers way back. We were looking to go long. I said we were somewhere over here, and I said, we want to get in because I had drawn this as a target and hit that target. Then I had drawn the Chapman wave inside wedge, target resistance line, this little pale blue, greenish line there, dashed line, plus the Chapman wave left side, right side price time match, which said that by the 22nd, 23rd of July, we should be testing 44.15. Yesterday, what did we do? We went to 44.15. Today, we're at 44.55 as a high. Now it's at 44. I think it's time for a little bit of a rest, but look, the technicals are still very strong, very strong. Next question I had was, yeah, the one thing I am looking at here, and this, we've never been in this before. We're in the DBA, which is the, let's call it, this is the 1647 down 9 cents right now. This is the Invesco DB Agricultural Fund. We've been long since 1587. It's already hit 1692, hits the 200-period moving average 3 times. Now it's coming back down. And this is the grains, and the grains have had a spectacular move. I think the grains are having a tough time here. They've pulled back quite sharply, but a chunk of the decline might have been done. And at 502 right now, the wheat, I think it could pull back still to the 480, 478 level. But the weekly chart is saying, you know, I'm holding very well. Don't ignore me. My MACD is still very strong. I could quite easily turn up. Same with soy, trading down right now. Same with corn. Corn trading down right now, down 2. But it's the same story. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
Tom O'Brien published the 900th issue of his weekly newsletter, The Gold Report, on July 22nd. It's amazing he started The Gold Report more than 17 years ago when gold was trading at only $252. To celebrate, we're having a special Tiger Dollar sale. Right now, you can spend only $495 and we'll give you 200 extra Tiger Dollars, so you'll end up with 695 Tiger Dollars, which is the yearly price of The Gold Report. Tiger Dollars can be used for any TFNN newsletter or service, and this offer is open to new and current subscribers. With gold making 6-year highs and gold mining equities trading higher, this is a great time to sign up for the Gold Report at a dramatic savings. For all the details, visit the front page of TFNN.com. This deal ends July 31st, so don't miss out. Get your Tiger Dollars and sign up today for the Gold Report 900th issue sale. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV for the latest market information.
I've always about Schnitzer Steel trading right now up 20 cents at 26.81. I usually do this in notation, but I haven't got it right now, so let me just do this real quick. As quick you can go. Lowest low bar, count each successively higher peak. At a peak D, we've got to be careful. It could go to E and F and then pull back. It's exactly what it does. And now it's got a brand new inside. Remember, this is what I always do. You got a little flagpole, sharp move down. I always grab the rectangle, and then I say you could have an arch a cup formation going back in a Chapman wave methodology. You'd go back in a shorter time frame to at least a D. The objective would be to go from the low bar, as long as it holds steady, it's a good support, and starts an inside buy signal that goes to a buy mode. You could go, in fact, to a Chapman wave D or E at or just under, right at, or close or just above the previous high. Well, it's done exactly that beautifully. Let me just notate this in the Chapman wave methodology. Peak A, 120-minute chart, peak B, peak C, peak D. Where are we right now? Peak E, and the MACD is still good. The stochastic is still at 95% good. So this is holding very nicely, but you add an E, you've got to be careful. So what is the labeling here? It's a G, because it broke to a new high with the alphabet just continuing, or you've got the inside buy mode going A, B, and this is a /C, meaning that it could go to D. This is where you got to start doing your homework, because the notation is not as clear. The price is beautiful. A cup formation, only green candles. You might have a little bit of a pullback, but there's enough energy to say you could make it a G/C peak, and then one little pop-up slightly higher to maybe 27.10, and then start a deeper consolidation. But it's only a leg B in the weekly chart. Good eye, peaky in the den. It started a nice move. Schnitzer Steel trading SCHN. It is breaking out. Difficult to buy it here, but yes, I think you've been holding it for a while. The SLX, which is the steel sector ETF, which I always talk about, we haven't gone back in for quite some time, has had a nice move, but it's kind of stalling here, and I think that it will be in play later this year, but it just needs a little more work, okay? Just have a little patience. It's at 38.58. The Schnitzer at the same price is actually a better looking stock, but this is the whole ETF, steel ETF. Question I had about, where did it go? The VIX index, let's see where the VIX is. Yesterday we had a great entry with a lousy trade, just a very small loss, very small position. It was just like a feeler position, and then got taken out. And today the low was 1169. Now the VIX index is trading at 13.46, almost at the high, but it's still way under the previous high. This is a process. See that rectangle formation? You go a little bit under it, then a little bit over it, until the VIX index is trading decisively at the 1495, 1510 area, closing there on a one-day basis. This is just the rotations continuing through the different sectors. But all my analysis says there's a real good chance that we're making some kind of a short-term top right here, and that over a period of 2 weeks or so, maybe even 3 weeks, we're starting to have a big consolidation. Google coming out with earnings, I see, thank you, Dave, At 4:15 today, Goog Alphabet made a peak F 1158.58 high just about 8 sessions ago. But the all-time high is, wait, did I not type that in? Come on, how many times do I have to do this? Do it now. Okay. The high of peak F right there of 1,273.89 back in July, a year ago. 1,273.89, or was it 99? 1, 2, 3. Oh, that's it. I've already got it there. Okay, that was August. It must have been July. That was right there. That was the high, and then it had a big pullback to the 1030 area. Now it's trading at 1126, down 11. Whew. Earnings come out. My impression with Google is that they're still going through a very big digestive phase of overspending, and they still, I don't think even now, are they starting to change that overspending mentality. So I would not be surprised if there's a sudden disappointment in Google Alphabet, and it takes the QQQs lower. That's the kind of thing that I'm talking about, that this is a process. If there's a big spike, it'll be something else that pulls the Qs back a little bit, unless everything's in sync. And right now, there's just too much going on for it to be in sync. I think that Google is just stuck in a range. Let's see what Amazon's doing today. Amazon, when is Amazon's earnings, or did they come out? I never keep up with this stuff. Amazon just trading sideways in the lower band at 1984, down 16. Yeah, it's going to have to work very hard to break into the 2050 area where the all-time high was, but it got very close. But now I think it's in that digestive phase. Deckers, let's see what Deckers is. What time is Deckers? 4:05. Look at this. Deckers has outdoor equipment almost at the all-time high, 177.83. Peak E in the weekly chart, leg G/C with a doji candle with a week to go for the month. So we can't talk about that. The way it's looking right now, it looks like it could have a little bit of a pop-up and then go right back into the rectangle. So this is what I'm saying. Maybe Deckers is telling us that if it has a little bit of a pop-up, it's at 178. If it can go to 183 overnight because the earnings are at 405. If tomorrow morning with a report that comes out, with a conference call, whatever it is, if it starts to pull back, it just goes back into the range because it's established at the 171 area, a huge base. If it ever cracks 171 to go to 169, that's a problem. This becomes a huge resistance. That's the way these things work. So it's going to be very interesting. Let me just see what else is coming. Oh, Starbucks. Now, if they didn't have that overseas, if they were so popular in China, I would have said, by now they should have run their course, but they are brilliantly managed. They really are. Now, this is a leg B in the monthly. There's no other way I could count this. And it's gone from the December lows of 47, 48, 46 to 80 to 90. This is spectacular. It's gone to a peak G/C at 91.61. Today's high is 91.55. Misses it by 7 cents by going to a new all-time high. This has got that same pattern right here. So if Starbucks suddenly comes out, because China, people don't give up their coffee or whatever it is very easily. All these little inexpensive habits that really add up at the end of the month. It's really tough to change the habits for those things. So I suspect that because of the FXI telling us that China, that's the China index, has been stuck since it made the high of 44. Well, the all-time high was back at 54 in January of 2018, and then plunged down to 38. Then it had a good rebound to 44, and now this 44 has slipped to 41.50, and it's trading at 42.21. It's stuck in a range. So if China becomes an influence in Starbucks because their slowing economy has meant that there actually is less buying, maybe they see some overseas softness. But at this particular point, at 90.94, you would have to see a close on a weekly basis under 88 to even establish some kind of a reversal. These are wonderful looking charts, but now it just looks ready. I'm going to draw this in and see how it pans out. It could go a tad higher, but I'm going to put this in and say, here's my trading range. Down to the 84s. It's at 90.92 right now. Over the coming weeks, hey, it could happen tomorrow. It could take months before it does it. All right. I'll be right back. Basil Chapman, got a couple of questions I can still answer. I'll do some of those that were for today, tomorrow, because they're kind of relevant. I'll be right back. Dow's down 171. S&P's down 16. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, so earnings come out today at 4:05 for Stryker SYK, all-time high right now. These stocks that have made all-time highs, I think this is in the medical area. I used to follow this closely. I don't have the notation, fresh notation right now. I believe this is probably a new leg B to the upside. This is done fantastically at 213. I think that if it's going to consolidate, it can go to the 202, 198 area over a period of weeks if it starts to do that. But you'll know, because at 213, if you see this trading under 205 in the next week, that's a real problem on the shorter term, but longer term, fabulous action. Okay, let me just review now. The Dow trading down 170, 184 at this point. This is starting to move out of that rectangle formation. Remember, we have a little a nice issue right now. We're still quite heavily long from the June 3rd low. And what I see, we're not going to change that position. We take some profits off. We want to try to keep that, because I don't see us going down to the June 3rd low at this particular point. I might see something a little later, but I do say short term, that short that we started in the Dow, 7 points from the top, that's the one that we might add to. I was going to do that earlier, and I thought, let this play out. At this point, it's a small percentage loss or win either way, because we're not neutral, but we are looking at either taking a little bit off one position and adding to another. I don't know yet. I've got a feeling it's going to tell me by the day's end. This is the period you've got to be very careful. I'll do the same thing with it. So if the Dow trades under 20, I'm going to say 26,950. It closed below that, kind of establishes a sell signal to sell mode. It could happen earlier than that, but I'm just being a little conservative there. And in the S&P 500, the S&P trading down 18 right now, 3,000. If the S&P starts to close, first of all, at 29, let me say 29.93. Watch out, because that 29.87 area could come very quickly. And the low that was established just about 4 days ago and 5 days ago at 29.73. You see this. You see the S&P start to trade at 23.78 to 29.73. That low is going to be taken out because the MACD and stochastic will be very negative at that point. So just keep that in mind. All-time highs changes the whole scenario, but that's what I'm looking at. Choppy to sideways to down over a period of a week or two, maybe more. I'll be back tomorrow. I'll be back with Tom this afternoon. Have a great day. Stay tuned.